Tom is a 31-year-old graphic designer in Hamilton who picked up freelance work on the side last year. Nothing dramatic, just $22,000 in contract income deposited into his checking account. He figured he'd owe maybe $2,500 in income tax. He set that amount aside and felt responsible about the whole thing. Then his accountant called with the real number, $4,800. Nobody had warned Tom that self-employed Canadians pay both sides of Canada pension plan contributions. That bill alone was nearly $2,400. He had done everything right except the one calculation that mattered most. Here is what most Canadians do not know when they receive their first T4A slip. A T4 means tax has already been deducted. Your employer handled it. A T4A is completely different. When a client issues you a T4A with an amount in Box 048, fees for services, no tax has been withheld. Zero. The payer simply told CRA what they paid you. That is it. The full tax bill lands on you at filing time, and CRA already has the number before you file. They are waiting to see if yours matches. Here is where Tom went wrong. He tried to enter his $22,000 on the wrong line of his return. Income from Box 048 does not go on the other income line. It belongs on Form T2125, the Statement of Business or Professional Activities. This is the form where self-employed Canadians report gross income, deduct eligible business expenses, and arrive at net self-employment income. Tom had $2,240 in legitimate expenses, home office costs, and software subscriptions. That brought his net income down to $19,760. Every dollar of that $2,240 in deductions reduced both his income tax and his CPP bill. Filing T2125 properly and claiming even modest expenses would have meaningfully lowered his total owing. Here is the number that changed everything. Self-employed Canadians pay both the employee and employer portions of CPP. In 2025, the combined rate is 11.9% of net self-employment income. Tom's net income was $19,760, minus the $3,500 basic exemption, $16,260 in pensionable earnings. At 11.9%, that is $1,935 in CPP. Add his federal income tax after the basic personal amount, and his total bill came to roughly $4,800. He had budgeted $2,500. The gap was almost entirely CPP he never saw coming. Here is what to do this week. Step 1. Pull out every T4A slip you received and check Box 048. If there is an amount there, you need to file T2125. Step 2. Gather your receipts right now. Home office costs, software, equipment, phone, these go on T2125 and reduce both your tax and your CPP bill. Step 3. Set aside 25 to 30% of every side payment you receive for tax. Step 4. Know that June 15th is the filing deadline for self-employed Canadians, but any balance owing is still due April 30th. That's 14 days away. If you have side income and have not filed, April 30th is your payment deadline.